Good morning, everybody. Todd Hanley here, your Senior Loan Officer with United Direct Lending, here to give your Monday morning mortgage market update. Hope you all have a fantastic weekend. Let's jump right in because it is going to be a massive week. Why? Well, I'll tell you here in a second. So we already had the 10-year yield coming out of the gate, down 3.8 basis points starting out the day. It's sitting right at support. I'll show you some moves it can make on the long-term chart that can really bring us lower, but we have to get through this week. Let's jump over to my website, todd.mortgage/mortgage rates, and we have the 30-year under 7% again. I think it's going to be there for, well, we'll see what happens this week. I don't know yet, but 30-year fixed on FHA, 6.32%. Once again, I get you into fives. 30-year FHA, 6.34%, and the jumbo still hanging a little bit above 7%. So a little bit more work to be done there. Over to the economic calendar. This is where all the action is going to be happening this week. So the economic calendar this week, we have the Treasury refunding announcement today at 2 p.m. Now, the actual numbers coming out this week too, but that is going to be the Treasury Department coming out and estimating how much debt they need to issue in order to fund the government. That can be a big market mover, so keep an eye on that one. So Tuesday, we have some home price data. Case-Shiller as well as FHFA. Those are the main indexes to watch. Those will be out 9 a.m. tomorrow. A little bit of consumer confidence. Job opening labor turnover survey is a big one to watch. That's the JOLTS, and that will show how many jobs are open, and as well as the quits, which within there you can see which industries have higher quit rates. It's all great information to look out for. Wednesday, coming up, we have the ADP jobs, which is private sector jobs data, a great number to watch and definitely can sway the market. And then there's that Treasury refunding announcement, which was a big indicator to watch back in 2023. Watch it Wednesday at 8:30. Employment costs, big number that affects inflation. So that's a big one to watch. Chicago PMI, as well as some pending home sales on Wednesday. And then look at that. We have the Federal Reserve as well. So Federal Reserve is meeting on Tuesday and Wednesday. Wednesday at 2 p.m. is when they make their rate decision. And then at 2:30 is the news conference when the Fed Chairman Jay Powell gets drilled with questions, and we get to see some of the other data and information that is going to be talked about. Thursday, we have the Challenger layoffs, and then we have jobless claims. Continuing claims have been creeping up. So keep an eye on that number because that will affect interest rates. Some other stuff to watch here is the S&P Global Manufacturing, and then the ISM numbers coming out 10 a.m. on Thursday. So massive week. The big one is right here though, and that's Friday, and we have the BLS, Bureau of Labor Statistics jobs number, and that is when you're going to get average earnings, you're going to get job creation, participation rate, and the unemployment rate. That is always the biggest market mover, so keep an eye out for that one. And then moving over to the long-term chart. So we made a lot of big progress last week. There was a little bit of a bounce right here as expected because it was a little bit of an oversold bounce. This is what we're watching this week, right? So we have right now a support line which is holding up the yield right about here. Once we break this, we should start, working our way down to this area right here. The spread right now is about 2.5%. So if you add in 3.9 and 2.5, you get 6.4 on the interest rate. So once we get our way down here, you're going to see a lot more action on rates and refinances and hopefully some home purchases because affordability will definitely be in a better spot. But we need to get through all of this support area right here. That's going to take a lot of data. If we get it this week, we'll see. The yield is really primed to go lower. I think that's pretty obvious with the trend here. Expectations are really baked in for a lower rate. September rate cut is probably happening. I think it is. So thanks for watching. If you have any questions, definitely reach out. Feel free to share, comment, or like the video. And thanks for watching. It's going to be a great week, so keep your eyes open. Take care.